In this episode, we speak with Brian Dudley, partner at Adam Street Partners, a global private markets investment manager with investments in more than 30 countries across 5 continents. Adam Street is 100% employee-owned and has $62 billion in assets under management across primary, secondary, growth equity, credit, and co-investment strategies. The firm strives to generate actionable investment insights across market cycles by drawing on over 50 years of private markets experience, proprietary intelligence, and trusted relationships. Since joining Adam Street's growth equity team in 2013, Brian has led the firm's application software investments, focusing on growth equity in software, fintech, and consumer sectors, while actively contributing to thought leadership, industry events, and several key committees. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Brian, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Thank you so much for having me, RJ. I'm excited for the discussion.
So the name Adam Street actually brings back a lot of memories for me because when I got started in the private equity world, or actually it was my second kind of role in private equity, I was working with Merrill Lynch investment banking. Adam Street would always be on the list of names to call because we would be working on behalf of companies and advising them on growth equity as well as private equity. But the reason why Adam Street was always on, not just because we had a relationship with the firm at the time, but because they did a lot of different things. And I was refreshing, and it looks like you have a portfolio of solutions you could provide or ways in which you invest in the private market. So maybe let's kick off there, Adam Street broadly.
Awesome. So you are exactly right. And maybe I'll take it back to the origins of the firm, and then I'll fast forward to today. So Adam Street as a firm has been around for about 50 years. We were founded in the early 1970s. And at that time, we were a single dedicated fund strategy making direct company investments, which is an evolution of the team that I'm a part of that I'll circle back to in a second. But I guess what we have really morphed into in the subsequent 5 decades is a global private market investor. And really what we mean by that is we manage about $60 billion in assets across 5 different and distinct private market investing strategies, all supported by 5 different teams, but that very importantly, all benefit from the collective insights, knowledge, and relationships that each team has. And maybe the easiest way to think about how that pie breaks down, that roughly $60 billion in assets, is that about half of that, about 30 billion, is in our funds of funds program. And essentially what they do is they go out and invest into early stage venture capital funds, as well as traditional buyout funds, both here in the United States and internationally as well. And then the remaining, let's call it 30 billion, is investing directly into companies in some form or fashion, whether that's along the equity lifecycle of a business, where my strategy and my team spends all its time, or along the debt lifecycle of the business. And so circling back to our oldest fund strategy and the team that I'm a part of is our growth strategy. And because growth or growth equity can mean many different things to many different people, when we say growth, what we mean by it is taking minority positions in fast-growing technology and healthcare companies that have come through the traditional venture capital formation process. And so you can see the evolution of the platform where we started out by investing directly into companies. You are correct in categorizing us really as a private market capital solutions provider that has scaled from a small little office in Chicago 50 years ago to 350 employees and 12 offices around the world.
And, when we think about your bucket of growth equity and you reference venture capital formation, is it that your opportunities that you hone in on have to have these fast growing profiles? Because sometimes we think of growth equity as more capital efficient, cash flowing, and predictable. So it seems like in your case, you might have to see some outsized returns.
You are exactly right. And maybe taking a step back, our strategy on our growth team has remained relatively consistent over the decades, which is, as you mentioned, to invest in rapidly growing technology and healthcare companies post product market fit. And really, what we mean by that is the CEO or the company or the management team has found a repeatable and scalable business model that they're really looking to invest behind, whether that means hiring more sales reps or pouring gasoline in the marketing engine or really expanding into new geographies. So I guess what you can take away from that is what we don't underwrite is product market fit risk and really scaling and execution risk. But maybe more specifically to your question, when we think about our strategy and the opportunity set we get excited by, are those companies that have some unfair advantage, and I'm sure you're familiar with a variety of different aspects in which that could be, but it could be in distribution, data, a product insight, or quite frankly, even founder experience. And so when we meet with companies, there are really two key things we are looking for. The first element is really around an all-encompassing DCF of the financial profile of the business. And there are a variety of different analyses that different investors perform, depending on that particular fund strategy, where one fund might index more highly on certain financial elements than others. And so you can think of growth rate, which we index highly on, or scale, or unit economics, margins, profitability, and or cash flow, as you mentioned. But in essence, the way that we view the financial profile of a business is that it is really the result of such market demand or such market pull for a company's product because of some unfair advantage that the company has. The second element is much harder, but in our opinion, far more important, which is really the DCF on a CEO's trajectory and or personal growth. And the reason this element is so much harder because ultimately what we're trying to do as investors is wear the hat of a social psychologist and distill a variety of different characteristics or traits or qualities that a management team has that can hopefully shift our underwriting case to the right, whether that's vision, passion, strategic thinking, empathy, drive, a whole bunch that I'm sure you're all familiar with. But we believe this factor is so much more important because at the end of the day, what we are ultimately investing in is people, and in particular, the CEO.
Mm-hmm. And this is a competitive market. If you identify the perfect candidate across those two main criteria, you're going to have a slew of other firms going after them. How do you compete? How do you differentiate yourselves?
It's a great question. And there are probably a couple of elements worth highlighting here. First and foremost, it is worth mentioning that we are exclusively growth investors, meaning we focus on a specific subset of companies at a certain scale and growth profile in the company's story arc. Second, we are very thematic in our approach to investing, meaning we spend all our time in four key sectors that we believe are going through rapid dislocation and change as a result of the application of technology within those sectors. And so for us, those four categories are application software, where I spend all my time, infrastructure software, so you can think of things like cybersecurity or DevOps platforms, fintech or financial services, and then healthcare technology. And we think that by doing that, we can identify companies that are at a certain inflection point in their maturity or growth trajectory and ultimately get in at really attractive risk-reward profiles. Finally, and perhaps most importantly, if you take a step back as investors, there's many things we need to do well, but we believe there are three key things that we absolutely have to do well to deliver good returns back to our LPs, which are number one, source, number two, pick, and then ultimately number three, win those opportunities or those companies we are excited by. And we believe the Adam Street platform, which we touched on a little bit earlier, really provides us with a very unique and differentiated advantage in all three of those areas, given the vast sharing of knowledge, insights, as well as relationships that we have across the entire Adam Street platform.
Mm-hmm. And so there's this spectrum of funds and kind of where they place themselves in terms of providing operational capabilities and how they help companies, it seems that Adam Street is maybe more along the lines of an asset manager that is, investing in these companies and maybe doing so more broadly, but not necessarily getting so involved on the day-to-day or operational matters of each company.
Unfortunately, it's actually the complete opposite of that.
Okay.
And maybe let me take a step back and
Yeah.
take how we think about helping our portfolio companies, whether we are on the board of those companies or not. And so we have tried to be very strategic and thoughtful about how we help our portfolio companies. And so, as I've mentioned, we've been investing into the private market ecosystem for over 50 years. And over that time, we would like to believe that we have developed enough institutional knowledge around the typical challenges and hurdles that growth stage companies face as they scale their businesses. And so as a result of that, we have tried to craft our internal resources around those elements. And for us, we think there are really two key ways we can consistently help our portfolio companies. The first element is around revenue, or maybe more specifically, revenue growth. As I touched on earlier, we manage about $60 billion in assets across a variety of different private market investing strategies. We have about 350 employees in 12 offices around the world. And what this ultimately provides us with is a very deep network and connectivity to so many businesses and professionals that often allows us to make warm introductions to companies on behalf of our portfolio companies on a global scale that hopefully translates into customers and revenues for our portfolio companies. So what you can really think of this as is a unique and highly leverageable and efficient go-to-market strategy for our companies. That's number one. The second element is really around human capital, and in particular in the form of executive leadership. Internally, we maintain a highly curated set of individuals across a variety of C-suite positions that can often parachute into our portfolio companies and either advise those portfolio companies around a particular initiative and or challenge, or ultimately join those portfolio companies in a specific leadership role. And so we believe that if we can consistently execute against these two value add services, we will be able to help our portfolio companies build enterprise value and hopefully get them to that next level in terms of their growth profile.
I think one thing that's interesting is that it seems that you were at Adam Street early in your career, then you went to business school, and then you returned to Adam Street. What is it about the firm that was special to you such that you did return and you've been there for a long number of years?
I think there's a couple of things worth touching on. And I think first and foremost, it's the culture of the firm that we have internally. We have worked really, really hard across the platform, quite frankly, to build a great culture. And I think it's that culture that we've built that really balances rigor with curiosity, collaboration with speed, and really allows us to have a competitive advantage in the form of the Adam Street platform. So I think that's number one. Number two, what I do believe is that this is a very apprenticeship-driven model. And as an associate, when I joined Adam Street about 13 years ago, I had a front row seat to see how the senior investment professionals, specifically within our group, but quite frankly, across the organization, work. And when I went off to business school, I had a time to step back and think about what it is that I wanted to do long-term in terms of my career. I tried a couple of different things, but ultimately what it did is it just reconfirmed my desire to get back into investing. And again, what I realized is that if I wanted to be successful in this industry, it was largely going to come from those who were willing to take me under their wing and mentor me and hopefully limit the amount of mistakes that I'm undoubtedly going to make throughout my investing career. And I felt like I had a partnership group within our growth team that were not only interested just in my professional development, and I'd clearly shown that, but they were also very interested in my personal development as well. And so I think from a unique competitive advantage that we have, that I think you just need in this industry to be successful, but pairing that with an incredible culture that those before me have built, I felt like that combination was a very unique environment to work in. And hopefully at the end of the day, maybe I'll be so lucky as to have my fingerprints across a couple of very unique drivers that we have ongoing internally at the organization.
Are there like one or two areas of technology that you're most excited about?
Yeah, I'll first apologize in advance for this because you probably had this answer over the last 12 to 18 months on your
Yeah.
podcast. But like many others, we are incredibly excited about the next wave of generative AI and specifically agentic AI, where AI models move beyond static models and passive assistants or co-pilots and into far more dynamic systems that don't just respond to queries, but can complete complex multi-step objectives. And while we are undoubtedly very, very early from a market perspective, we do think that the startups that will ultimately win here are those companies that stitch AI into the fabric of work, making employees or people 10 times more productive, 10 times more accurate, or 10 times more creative in their roles. And maybe just to ground that sort of 30,000 view of the market into a concrete example of this that is in our portfolio today is a company called Glean, which is an enterprise search platform powered by generative AI. And maybe the easiest way to think about what the company does is provides a platform that connects to all data within an enterprise to enable users or employees to instantly find, create, or really automate anything. And so the ultimate vision of Glean is to provide a general purpose assistant for every knowledge worker in every enterprise around the world. And as a result, supercharge those employees' productivity and efficiency. And so hopefully that gives you a flavor for the type of company within the sector that we are really, really excited about.
One area that we frequently talk about, and we have these events we put on. We have one coming up in Jackson Hole, but we're bringing like athletes, highly successful athletes there to talk about the relationship between principles of success in sports and athletics to principles of success in business. You were an athlete. I mean, maybe you still are, competitive in some sports, but you're a collegiate athlete. Tell us about maybe your experience being a D1 athlete and how maybe that has helped you in your professional career.
Maybe just for taking a step back, I was born and raised in South Africa. And then shortly after graduating from high school, I was very, very fortunate to receive an athletic scholarship to the University of California, Berkeley, where I played water polo. And it was interesting. We would often have speakers come in and talk about persistence and motivation and working in a team culture and time management. And as an athlete, you're trying to balance the rigors of a D1 schedule of practicing 6 hours a day, traveling on weekends. But at the end of the day, particularly as a water polo player, the career after undergrad is very, very small. And so you almost by necessity need to balance that with a very rigorous academic program that Cal offers. And so I think the translation is there is a very, very high correlation, in my opinion, because of these elements that you maybe take for granted as a student, actually, because it's necessary requirements to play at such a level as D1 NCAA. And so I think it's highly transferable. And I think there's elements of just putting your head down and grinding, being able to operate in the gray. And I think that's particularly transferable to the investing ecosystem where you're not working in a highly structured environment. And ultimately, what we are being paid to do at the end of the day is make decisions in the gray. And I think you have to be very, very comfortable with that because, as I'm sure you know, the feedback cycles in this are very, very long. They could be as long as 5 to 10 years, whether you figure out you're any good in this industry at all. And so I think having that confidence, being able to operate in the gray, being a self-motivator, self-starter, and in particular working in a team environment are highly transferable skills. And I think have been maybe one of the key reasons I've had whatever success, small amount of success I've been able to have in this industry. I owe almost entirely to my athletic career.
Excellent. We're entering the tail end of the conversation. I have two final questions. One is, can you tell us about a person who has had a profound influence on you?
It has undoubtedly been my mother. She is the reason I've been able to achieve whatever small amount of success I may or may not have achieved in my life. And she has always been at the center of it all, from how she raised me and my siblings to how she made countless selfless sacrifices to give us the things we needed, to instilling a drive and or a belief in us that allowed us to reach our goals that maybe at one time or another seemed too far out of reach, to everything in between, and perhaps even a whipping when we needed it. And so today I'm very fortunate to have the most amazing wife in the world and 3 beautiful children of my own. And I find myself consistently asking how on earth she was able to do it all. And so my mother undoubtedly had the biggest influence on me growing up, and quite frankly still inspires me every single day.
Excellent. Last question. Can you tell us about a charity cause or other endeavor that you're passionate about?
Maybe I'll keep it on theme with my mom, given she helps and supports so many nonprofits and organizations. But of those, the one that I perhaps have felt a stronger gravity or pull towards in her portfolio is a organization called Rally Cap Sports. And what the organization effectively does is provide special needs children with the ability to participate in sports. And maybe this won't be too surprising based on your prior question, but maybe the reason I felt a close affinity to Rally Cap is because it is based in sports, and it is something that has been super influential in my life and something that I'm still super, super passionate today. So hopefully 1 or 2 of your listeners will be so kind and gracious to look up the organization and make a donation to a really great cause.
Absolutely. And we'll include a link in our show notes. Well, Brian, I want to thank you again for taking the time. This has been a great conversation.
Likewise, RJ, thank you so much for it.